Hello, everyone. Welcome back to our channel. Today, we have an exciting topic to dive into.
Have you ever just looked at the market and had that sinking feeling that it's kind of rigged against you? You see a stock take a nosedive, and it feels like every small investor is panic selling at the absolute worst moment, while the big institutions are just scooping it all up. Well, that feeling, it's not just in your head. So let's just get right to it and ask the million-dollar question: why do so many regular investors end up losing money? It's incredibly frustrating, and today we're going to get to the bottom of it. We are going to break down the 5 fatal traps that cause investors to just hemorrhage cash. And once you understand these, and we'll look at some real-world examples, it can completely change how you approach the market. So let's dive in. All right, first up, we're going to start with the first 2 traps. And these are all about what I call the inner game. These are the psychological battles you have to win inside your own head before you can even dream of winning in the market. So what is trap number 1? It's the most basic, and honestly, it's the most common reason people lose their shirts. And it is simply a lack of knowledge. I mean, think about it this way. You wouldn't let someone perform surgery on you if they didn't have a medical degree, right? Of course not. And yet, so many of us jump into the stock market, this incredibly complex system, with zero training, just hoping to get lucky. And this right here, this shows you the huge gap between the pros and everyone else. On one side, you've got strategic analysis, training, deep preparation. And on the other, you have impulse decisions, pure guesswork. And it's right in that gap where most amateur investors lose their hard-earned money. Now, this first trap, the lack of knowledge, it leads directly, almost every single time, into the second trap, which can be even more destructive to your portfolio: emotional trading. See, when you don't have a solid plan or the right knowledge, what's left? Your gut feelings, your emotions, the fear of missing out, or FOMO. It makes you buy right at the very top. And then the fear of loss makes you panic sell at the absolute bottom. If you look at any recent market crash, you'll see it plain as day. Those huge drops are fueled by retail panic. There's a famous saying: the market is an expensive place to find out who you are. And it's so true. Because if you're trading based on emotion, you are essentially providing the liquidity. You're the fuel that the professionals use to their advantage. You're the one selling low so they can buy low. Okay, let's move on to trap number 3. This one's about something that most beginners totally ignore, but it's the one thing that could actually save them. It's all about playing defense. So what's this critical third piece of the puzzle? Well, think of it as the shield that protects you when things get crazy in the market. Without it, even the smartest stock pick can blow up in your face. Trap number 3 is having absolutely no risk management. Now, I know, this isn't the sexy part of investing, but it's what keeps you in the game long enough to win. We're talking about using simple tools like a stop loss, which is just an automatic sell order if a stock drops to a price you decide on beforehand. This isn't a sign of weakness. It's a pre-planned, logical decision that pulls emotion out of the equation. It is your financial shield. And a huge part of managing risk is just managing your focus. Now, what's so interesting here is that it makes a really powerful, maybe even controversial point. Focus is your best friend. A lot of people think owning 20 or 30 different stocks means they're diversified. But for a beginner, you're not diversified. You're just distracted. There's no way you can manage the risk for all of them. Focusing on just 1 to 3 companies you truly understand, that lets you protect your money and react smartly, not emotionally. Okay, so we've covered the internal stuff, the things you can control. But now let's talk about the game itself, because let's be honest, it is not always a level playing field. These next 2 traps deal with the real systemic challenges that every retail investor is up against. Which brings us to trap number 4. And this one really explains why you so often feel like you're always a step behind the big players. It's called information asymmetry. Look, in the world of finance, information is the single most valuable thing there is. And here's the hard truth. The big institutions, they get it faster. They get more of it, and they have the tools to understand it better than you or I ever could. This is the perfect way to picture it. You, the retail investor, are working with the delayed newsfeed. It's like you're on an old dial-up modem. Meanwhile, they have supercomputers and entire teams of analysts. They've got a fiber optic line plugged directly into the market's brain. A perfect real-world example of this was the huge Reliance Industries rally back in 2020. Remember when giants like Facebook and Google poured billions into geo? Well, you can bet that the big investment firms had armies of analysts modeling the chances of that deal for weeks, maybe even months in advance. They were buying in quietly. By the time you got the breaking news alert on your phone, the stock had already shot up. The party was basically over. Now, the point here isn't to get depressed, it's to change your strategy. You can't beat them at the short-term news game, so don't even try. Focus on long-term value. They can't be derailed by a single news cycle. And that brings us to our final and frankly most sobering trap. This is the one that we all hope isn't true, but history shows us we absolutely have to be aware of it. And that leads us to the last trap, the one that can feel the most unfair of all: deliberate manipulation and insider games. This is where we have to just face the fact that sometimes the deck really is stacked against the little guy. For a chilling example, you don't have to look any further than the Satyam computer scandal in 2009. The chairman himself admitted to faking the company's books by over $1 billion. It sent a shockwave through the entire market. Now, you can be sure that insiders knew something was wrong and got out early. But who was left holding completely worthless stock? Ordinary, everyday investors. It's a powerful, cautionary tale. Okay, so after hearing all that, emotional pitfalls, information gaps, even outright fraud, it would be really easy to feel discouraged. But here is the most important takeaway. Just knowing that these traps exist is your first and your most powerful step toward avoiding them. This isn't about being scared of the market, it's about being smart about it. So let's just recap real quick. The 5 fatal traps are having no knowledge, which almost always leads to emotional trading, having no risk management to protect yourself, the reality of the information gap, and finally, the potential for market manipulation. Hopefully you can look back now and maybe see how some of your own past losses might trace back to one of these. And all of this brings us to one final critical question you have to ask yourself. When you put your money into the market, are you approaching it with the discipline of a business owner, or are you just pulling the lever on a slot machine like a gambler in a casino? Because the answer to that question will define your entire future as an investor.
இந்த வீடியோ உங்களுக்கு பிடிச்சிருந்ததுன்னா லைக் பண்ணுங்க, ஷேர் பண்ணுங்க, சப்ஸ்கிரைப் பண்ணுங்க. Thank you for watching.